Charles, thanks for joining me today.
Thanks for having me on, James.
Charles, I heard that you were the first mutual fund in the cannabis space in Canada, but I've heard also others laying claim to that same sort of idea.
Sure. We launched the first cannabis-focused mutual fund in the country. March 17th, 2017 was our opening day. And originally, almost 4 weeks ahead of the second entrant, which was the Horizons passive ETF.
Okay, so how much capital under management?
Right now, a little over $11 million, and holding steady. We've been doing really well with the advisor channel.
Sure. Okay. So this is a actively managed mutual fund, open-ended.
There's private equity funds. There's many private equity funds that are focused at looking at the really early stage, higher risk private companies. Then there's passive strategies, which I think ETFs with passive strategies have a place in everybody's portfolio, except you need a passive strategy when you're in a sector or in a market that's very liquid. There's a lot of research and a lot of coverage, well-known names, well-known industry, and a lot of liquidity. That's not the case in the cannabis sector. When you look at the last year, I think case in point has been made. There's a lot of volatility. There's not a lot of research on the companies, and there's a lot of volatility in the sector.
Yeah.
So that's where we believe you need active management. We are constantly meeting management teams. We're touring the facilities. We're getting to understand where their cost advantages are and seeing what their growth plans are.
Sure.
And really, I think that's where we have an advantage, because we can avoid some of the messes that we see potentially happening down the road. Whereas if you're in a passive strategy that only gets rebalanced every quarter, then you're in for the ride, and you cross your fingers.
I see. Okay, so then you also go out and visit these projects, as I have heard.
Yep, we've visited now close to 24 facilities in the last year, and we meet all kinds of management teams. We've been to greenhouses, we've been in indoor facilities, the hybrid spaces, which are a mixture of solid walls with glass ceilings, and we get a really good understanding of new innovations, of what the costs per gram are, and what they're looking at down the road. The biggest differentiator are the management teams.
Oh. Charles, you must have some favorites in the cannabis sector. What are some of your favorites that you hold in the fund?
Sure. For different reasons, we really like CannTrust. We have a strong position in MedReleaf.
Sure. What is it about CannTrust that attracts you?
A number of factors. Number one, great management team. Between Brad Rogers and his team, you've got a great combination of consumer packaging, consumer products people, as well as pharmacists and people that have been in the pharmaceutical industry. They've got a great board of directors with a lot of experience in the pharma business. And then added to all that, you've got a joint venture with Apotex, Canada's largest generic drug manufacturer.
Right.
So what that is going to allow them to do is take all their medications, help them both develop more IP and distribute to the over 100 countries where Apotex already has sales offices.
Wow.
So that's a big factor for us.
Sure, lots of distribution.
Yep.
Okay, and what are some of the smaller opportunities you see? Like, what are you attracted to in terms of an earlier stage company?
Right now, the sector has really gone through a big change even over the last year, where initially it was all about building capacity. All the licensed producers are either adding additional locations or building out their current projects. But now it's looking more towards technology. How can we improve efficiencies? So it's new applications to help with the grow process. It's companies that are reducing the time that it takes to get plants from growth stage into extraction. So where companies are going to be able to differentiate and reduce costs is how are they able to dry the plant out to get it ready for production. If you can reduce the time, you're reducing costs, you got an advantage.
Right. Charles, this time let's drill down a bit on the difference for investors in terms of risk and opportunity from companies that are Canadian listed, operating Canadian assets, versus Canadian companies offering A, U.S. assets, or B, assets elsewhere in the world that are fraught with their own different set of risk and opportunity sort of ratios. What's your overview on that?
Sure. I think there's a big opportunity to look at the operations globally. There's always going to be risks. And so one of the things that we do as active managers is we look at each company, we look at the regulations and the regulatory framework that they operate in. We want to make sure that A, they have the right licenses, that there aren't additional requirements that we didn't know about, and they're operating, within the general framework. I think the U.S. government right now adds a lot of dysfunction to the cannabis space. To
every space.
Well, but when you look at this, there's a lot of opportunity for the Canadians to take advantage and continue our leadership, while at the federal level, there really is no desire to move it forward, but you have this patchwork group of states that are increasingly legalizing for medical at least, if not for rec. So the Canadian companies have a great opportunity in the United States. It's a little tricky, but as we've seen with certain companies, as long as you're operating within the law, there are ways to take advantage.
Sure. So give me an example of a company operating successfully in the U.S. as a Canadian listed company.
So we would tell people to look at Canna Royalty. It's a Canadian listed licensed producer that has extensive business in California. And what's great about Canna Royalty is that it appears to be what the Canadian market will be down the road. What I mean by that is Canna Royalty doesn't have an extensive amount of production, meaning farming. But they are in all the value-added aspects of the cannabis business. They're in extraction, they're in distribution, they're in marketing, and that's where we see the future of this industry, not just domestically, but around the world, that you can't have plants being grown in 47 different countries because not all places have the right geography or climate. But where you can take your know-how into other countries and properly distribute your product, properly market, work with pharmacies, then you've got a whole different opportunity. And that's where I think Canna Royalty shows Canadian investors, and actually maybe why it's not getting some of the attention that the larger players in Canada get, is that Canadian investors have been taught over the last year, well, it's all about the number of square feet you have under growth. But actually it's not.
Not anymore.
Because that's an agricultural business with what some people would look at as very low margin business. It's what are you going to do with the plant once it's grown? You're going to extract it for oil, you're going to make medicines, you're going to make other value-added product. And by I mean value-added, I mean higher margins. So that's also one of the critical factors we look to in some of these companies.
Do you think that the licensing that's going on in states that have become pro-marijuana, do you think there's a risk of oversupply in the U.S. market and in the Canadian market separately?
Well, it's different because with a patchwork in the U.S., the states that have legal frameworks, product can't be shipped outside those states. So it's
the captive
from
markets.
A federal perspective, you're trapped. There will be production growth, and there is more production in the U.S., especially in those states where the climate is more conducive for growing.
Like California.
California, Arizona, Nevada. And so that's going to come over time. But we do see that sort of phenomenon taking place in Canada over the next 4 or 5 years, where if all the production gets ramped up to the funded capacity that we're talking about now, there will be a time where the licensed producers have generated or grown enough to satiate the domestic market. And that's where the global market still will be the added cream in the coffee. That's where the Canadians are going to do really well, because we've got export markets to be distributing.
And in Europe, for example, is the movement to sort of decriminalize and deprohibit cannabis for medical purposes along the same lines and pace of Canada?
Everybody's watching Canada. We're the first G7 country to legalize both for rec and medical. I mean, most people don't realize medical has been legal here since really 2001 and in a big way over the last 5 years. But Europe is going to take a step-by-step process. Germany was the first big market to legalize for medicinal purposes, and that's a huge opportunity because everyone knows Germany really is the center of Europe from a business opportunity innovation standpoint, and their medical coverage is very extensive when it comes to the cannabis medicinal properties. Many pharmacies, 90 million people, and so there's been a bit of a rush on the part of those Canadian producers to get into Germany. As long as you have, again, the right regulatory framework, many of the Canadian companies now have GMP certification to sell into Europe, and Germany is going to be their first base. And that's going very, very well for companies like Kronos, for American, for a couple of the others that are starting to get into Germany.
So from your perspective as a manager, as an active manager of a mutual fund, do you have a sort of hesitation to investing in companies operating in the United States because of the federal prohibition, or do you think that issue is largely more or less stable because of the détente that exists between states and federals?
I think that we take a one-by-one step process.
State by state then?
Yeah, state by state and even enterprise by enterprise. We want to see each state, a different population, different sort of licensing for cannabis, because each state is a little bit different in terms of the ailments that the medical cannabis is being offered for. So we've got to be really careful that although we think that it would be great to have access to a state with a large population, if they're only legalizing medicinal cannabis for 1 or 2 ailments that aren't really going to generate a lot of revenue, then again, it's more of an investment risk. Why be there?
Right, right. Okay, well, we'll leave it there for now. Charles, fascinating as usual. Thanks for your time today.
Great.